Hello everyone, this is Babuluki Mudisan. I hope everyone is good, everyone is surviving this COVID-19 and hopefully very soon we'll be out of this lockdown. But as of me, I've been engaging with my students and I've been helping them, better themselves. So first and foremost, I would like to just thank everyone who has been supporting us at Living in Profit. Those who have enrolled, welcome guys, and those who are looking to enroll in our course, we are still open for you guys. Hopefully by the time we get to a certain number, maybe we can post the enrollment or whatsoever, I don't know, but for now keep coming for those who need help. For those who don't know where to go, you can talk to me personally on Facebook. I go by the name Babuluki Mudisan. And then you can also talk to my partner Michael Sokoludi on Facebook, or you can just go to our website www.livinginprofit.com. You'll also get to find my number on the contact. There you can call me. So thanks guys. You can also follow us on Facebook, Living in Profit FX. You can also follow us on YouTube, Living in Profit FX, Instagram, Living in Profit FX, and you can also use us now as your payment agent for binary.com. The name that we also use is the same, Living in Profit FX. So yeah, I just wanted to get that out, and please subscribe, follow us for more content. We will be pushing more content. Mike will be coming through with the psychology part, the whole risk management part of things in forex, and I'll also be touching base on that as well. So yeah, I just wanted to break down VIX, since it has been paying for most of those who have taken the sales. So I'm just gonna go down from the higher time frame to 1 hour, because mostly when I explain past 1 hour, some people get confused and so on and so forth. But if I feel the need to go below 1 hour, I will. It will just depend on the momentum of how I'll be explaining things. I'll touch base on the higher time frame resistance or maybe support, and mainly I'll be just looking at structure, because if you are lost in structure, if at any moment you are lost in structure and maybe following just support and resistance, you are gonna lose the trade. So rather be in line with the overall structure of the pair than to just look at only support and resistance. For me personally, I look at structure first, and then just the time frame correlation aspect, and then that's when I get to identify support and resistance if I need to. But if I don't need to, I can just go from structure. So guys, let's start with the monthly time frame. You can see that this period separator shows different years. So it started in personally volatility 75 started, I would say 2016, as we can see, 2017, 2018, 2019, and 2020, which is the period separator that we are currently looking at the price for right now. So it has been bullish, obviously. It had a minor pullbacks here and there, and right now, for this year, I would say currently it's still bearish, I would say, because looking at this area, we have not actually closed above this resistance. We keep on just retesting this resistance. So let's just drop down to the weekly time frame. You can see that this resistance from the monthly time frame, we keep just retesting it. It hasn't been broken. So if it's not broken for now, let's just look to to sell, but at the same time understand that the market flow is, even if the market is selling, we would still get pullbacks. We would still get some days or some weeks that are bullish. but the overall, let's just try to always know where we are in structure so that we don't get lost. So let's get to just break down structure from the weekly time frame, like I did for some of my students who have been on an online webinar with me. So for this week, we had a bullish engulfing. So we're going to look at structure so that we can see how we could have taken advantage of that overall movements and change in direction. So one other thing that I want to tell you guys is when you're looking at the monthly time frame, is you correlate it better with the day, or if you're looking at the weekly time frame, you correlate it better with the 4-hour time frame, and then and so forth and so on. When you take it to the day, you correlate it better with the 1 hour, going down all the way to maybe 15 minutes if you feel you need to go to 15 minutes. Okay, so we have this horizontal line that we have identified where the market had a bullish engulfing. So we're going to take it to the 4-hour and identify where exactly the bullish engulfing was. So when you look at price here, you can see that this is the last lower high that the market broke, and it started forming higher highs and higher low on the H4 time frame. So that was the last lower high that was broken, and then immediately after it broke it formed a higher low, and then the market started just making higher highs and higher lows. It went all the way up. This here, we would say it tested this high, and then it did not come and close below the higher low. So we would maintain that the structure of the market was still bullish, and then it went to make a higher high, which was higher than the previous higher high, and then the higher low, the higher high, higher low, higher high, higher low. And then I would say this here was just another test of the previous higher high, so I would call this area just a high, and then it went to form the higher high here, and then after this higher high it formed a higher low, which from there got broken, and immediately when this higher low got broken, we started now looking at a different structure of market, which is now lower lows and lower highs. So this would be the first lower low, lower high, lower low, lower high, another lower low. Maybe we would expect a lower high somewhere around here. So now one of the other things that you guys could have used to just capture this, you would agree with me that this was a double top. It broke the neckline, it came back and respected or retested the neckline. This will be in my course in phase 2, market structure, and also using your Fibonacci. I don't want to confuse some of the people with just putting so many things that maybe they're not accustomed to, but that's just about it. So if you dissect the market in this way, you would realize that when you have the overall picture from the higher time frames, even if you drop down to the 1 hour, you already know what you are looking for. You already know what you are looking at, because mostly the 1 hour time frame will just have a lot of candles, a lot of noise. You understand? Because here some would think the market would go up, but you would see that it tested the resistance and broke it and came again to test it. Now here you would have to look at what we call supply and demand, and see that the market still came and tested this area. So these are some of the things that once you have enrolled for my course, it's easier for you to understand. And Also, what you could have maybe used here as a tool, you could have used maybe a trend line to identify what the market was doing here. It came here, tested this area. It was now testing the area that it was at previously. So as soon as the area broke this resistance here, you could have just looked for entries on lower time frames, or even just put your cells and just have a stop loss and just let the market to ride. Again, it goes back to how much you can afford to risk with your account, because volatility really needs for minimum, if you are not going to be playing around, you need at least $100, and you can trade volatility with ease, not panicking. Because the other thing about just trading with $20, $10, the thing is, even if you're on a drawdown that is not much, you get to panic because the account is getting negative. Yes, you are getting margin calls and all the like. So guys, that's just how I look at the market, how I break down the market. Always get the picture from the higher time frame and know where you are in the structure, even when you are on the lower time frame. Most people get to concentrate on the lower time frame and forget that they should be in line with what the higher time frame is doing. And also, most importantly, never get lost in structure. If you get lost in structure, you're gonna mess up your trades, and then you're gonna be losing, and so on and so forth. So thanks guys, hope to see you again soon. I'll be engaging with you guys soon. This video will be posted on my YouTube channel. You can comment, ask questions, and on the newer videos that I'll be doing, I'll be addressing some of the questions that you guys are asking. So thanks guys, be safe. Use this weekend to back test your charts and get better, and ask questions. I'm available to answer some of the questions that you guys might be having. So as the market is here, if this is the lower high, we are expecting a lower if this is the lower low, sorry, we're expecting a lower high and a continuation in the downtrend. But then if it breaks maybe this area and then it tests it, we expect the market to go up. So always be willing to adjust to the market. It's never about one time frame. Look at the overall time frame correlation and get it from there. Thanks guys.